As you just saw, the TSX is down about 17, 18 points. It was a little lower a few minutes ago. Our next guest says the overall positive tone from this week, as the week ended, not as it began, will continue heading into the long weekend. Joining us is Diana Avigdor, portfolio manager and head of trading at Barometer Capital. Good morning, Diana.
Morning.
We had a kind of a roller coaster week for sure. What's today going to be like in terms of activity levels and tone?
It's going to be very quiet today, Francis, as the U.S. there is a U.S. Columbus Day on Monday, and we have Thanksgiving on Monday as well. So we're heading into a long weekend, and the bond markets are closing early. Lots of people are away today, so activity levels are a little lower today. So I'm not surprised that the indices have turned down after a better than expected payroll number, both here and in the U.S.
Well, why would the markets actually turn down just because of the absence of traders today? The numbers were higher than expectations. The market's been sort of hoping for some sort of upside surprise from economic data. They finally got it, and yet today trading sideways, almost as if the markets don't believe the headline numbers.
I think that there is a lot less participants than you would think, and there is an absence of activity. So markets are moved around by squaring, positioning, and one-off trades back and forth. You know, we've had quite a lot of volatility. Actually, if you look in the U.S. Indices and U.S. futures, we've had it up. We have it down. We had it down 2, then up another 5. So it's been all over the place. I think that usually we look for reasoning and things like that. But I think today it's noise, given the low level of activity.
And
also, sorry.
No,
yes?
Continue, sorry.
Sorry, also we're positioned, what happened in the beginning of the week. We've had Monday, Tuesday, Wednesday, definitive strength, volume, and a little bit of anxiety and panic as people were chasing their names, both in short covering and getting long exposures for those that were fairly bearish up until now. Because some of the things that we're watching are starting to finally turn up. So I think we're going in a two-step forward, one-step back type of situation in the next few weeks.
In early June, Diana, you brought to my attention a graph that I now use all the time. It is this Citigroup expectations index, and at that time, this was in June, the index had fallen pretty dramatically, saying that economic activity or the data points were coming in below expectations. And the market was still way up there. Now the market has fallen, and this index is starting to turn up, which suggests that the expectations had fallen enough and things are coming in a little better. Is that a good indicator to continue to use to say, hey, the markets have caught up with the expectations?
Yes, I think it is. And we discussed this a few weeks ago, and I was saying that while the data, not the data, but rather the expectations have now come in enough to fit with reality, and the data was coming in better than expected. But the price action was not indicating that. Just like back in June, the price action was not catching up with the fact that the data was coming in weaker and weaker than expected. So now the price action is catching up with the fact that the data is now coming in better than expectations. So those expectations are now reality, and they're more entrenched in what's really going on. But we had some, we had some serious macro headlines out of Europe in the last month or two, and I think that the sentiment is in the last week or so that the politicians are finally coming to terms with actually doing something, maybe saying something, and sticking to the plan, and maybe trying to get it fixed up. So that's what's kind of turning the markets up a little bit. We've also had breadth indicators, the breadth indicators that we're following at Barometer. They've gone down, but they've now turned up, and they have not hit new lows, while the indices have broken down to new lows and then rallied back. So that was a positive. If you want to look at it in terms of it was making higher lows, and so our short-term and long-term breadth indicators have now turned up. And also correlations. We've discussed equity correlations that were extreme highs. They're starting to come now down a little bit, although still at high levels, but you can see a bit of degluing going on. So that's positive.
I'm curious what the sentiment is like among your clients when they talk to you. Are you hearing the sentiment improve when it comes to your day-to-day conversations, or are you looking at the sentiment indicators and saying, you know, that combined with what we're hearing out of Europe seems to be pointing up? What are the clients saying?
Yeah, so, you know, people are worried, and we have lots of conversations with people, and we at Barometer, as an asset manager to some of these clients, we're an active manager, so we are always managing exposure. Sometimes we don't have exposure. As you know, we can go quite high in cash, and we can utilize hedges, but we can turn the ship quite fast and get fairly long and take off those hedges and get a little bit more risk on. So people are worried. I think that you see cash flows out of long only and long-term not so actively managed products. You will see as clients get their September statements, I think that you will see further cash outflows because those statements are clearly fairly bad. But from our perspective, we've done okay in this environment. We were fairly capital preservation mode for the last couple of months. We have now gotten a little bit more bullish. We have now taken off some of our hedges. So we are a managed product from our perspective. We keep our clients exposed when they need to be and unexposed when we feel the risk is high. And yes, we may miss some of the bottom, and I've said this here before, there's no need to pick the bottom. You just need to balance out the potential return with the risk. And if the potential return is not high enough with the huge amount of risk that you're taking, then stay put and miss the bottom.
It's all about managing the risk, Diana.
Yes.
Thanks very much for joining us this morning.
Thank you.
Diana Avigdor, Portfolio Manager and Head of Trading, Barometer Capital.
Coming up, a full look at the markets, as well as Paul Bagnall have the latest analyst views on Wyland's hostile bid for Mossade.